Howdy folks, it's the big day, Nvidia earnings. Oh yeah, baby. Okay, two to react to here. All eyes on Nvidia. We're going to get into that one, react to that one, and then I want to react to this one. I'm not bearish on Nvidia, and this gentleman speaks about a few other subjects as well. So looking forward to getting to react to both of these. It's a very busy day for me, so I appreciate y'all joining me. The reason it's such a busy day is I got like a 3-hour live stream on Twitch about to start right after this video is over, so that'll be pinned comment if you want to join me for that. It's going to cover Nvidia's earnings, ELF earnings, and Snowflake earnings after the bell. Big busy day. Oh, all I need from you guys takes less than 3 seconds. Smash a like on this video, please, the thumbs up button, and make sure you're subscribed. That's it.
Most important thing going on today. All right, Joe. Wolf on Nvidia.
Big day for the market,
Rarely has
folks.
there been a single stock with such importance. As long as it tops expectations, they say, Nvidia is likely to remain a key tailwind for the overall U.S. stock market.
Big day.
Are you going to live up to the hype?
Do we really think that one quarterly report, even if they miss, is going to motivate investors to remove this company as a core holding in a portfolio?
No one's
this
saying
is an anchor. This is the anchor.
No one's going to say, oh, they're going to miss. You're going to sell it. I don't buy that one bit.
Absolutely.
I do think though that if they miss, the stock could go down a lot, and the Nasdaq could go down 2%.
So they get the benefit of the doubt if it goes down. And yes, the stock market will go down if there's a miss. The bear argument is simple. Forget that they have to beat. They have to beat by how much? They have to beat by an exorbitant amount.
That is true.
Fundamentally, the bear argument is the Blackwell chip is coming out later in the year, and you've got customers that are going to hold back on spending in anticipation of Blackwell. Argument. The problem with all of that is twofold. And the reason why I actually think tonight I wouldn't be surprised to see the stock up 5 to 10%. From a perspective of positioning, April 19th, stock goes down 10%. On what? The expectation that chip demand is weakening. What happens subsequent to that? All of the big technology, big technology companies report. They all report and they tell you what? We're going to be spending money. Meta, Alphabet, Amazon, all coming out. They say we're spending a ton of money. Stock rallies. During that period, what do we hear from the speculative and hedge fund community? They're cutting back positions in Nvidia and other big mega cap companies. And the option market is telling you right now it's skewed towards the put side. I actually think positioning is set up the right way where this stock continues to move higher and it goes above 1,000 tonight.
Jason, tonight we're talking about the options market implying a plus or minus 8% move, plus or minus $186 billion worth of market cap. Nvidia represents 5.3% of the S&P 500 and 6.5% of the Nasdaq 100, just in case you're scoring at home, as to why this stock holds so much importance tonight.
Here's what I'll say here, okay? Anybody that after those earnings comes out is selling or buying that stock is pretty clownish, just to be quite frank. We know Nvidia is such a great company. You don't mess around. You don't trade that stock. You buy it. You own it for the long term. And that's that. It's a very simple story. You know, there's other stocks, if you want to trade crap companies around, you know, they go up and go down. Okay. Nvidia, like, I guarantee you every single trader that has made any money on Nvidia or lost money on Nvidia stock the past 20 years would have been way better off just buying and holding the thing. Just buy and hold the thing. And if you see any major dips, dollar cost average, call it a day. Simple.
100%, Scott. And guess what? Last quarter, options market implied a 13% move either way. So I think the volatility has come down a little bit. I think what's important to me is something that Joe alluded to in terms of the performance and the price action. You know, the revenue guide was $24 billion for this quarter. I think the whisper number is around 26. You know, so you know, if they hit that or even come close to that, I think it's a blowout, obviously, and I think that's likely to happen. You know, the other thing is I think about the AI race and folks holding back on the Blackwell chip that's going to be produced later on this year. You know, when I think about the AI race, I don't think there'll be holdback on spending. I think folks will get into the H100s, even though it's not the most sophisticated chip. The more sophisticated one is obviously coming out later on this year. But I don't think that holds back anything. And I think that we'll see an explosive quarter this year. So, I mean, this at the end of this evening.
Jimmy, earnings year over year.
Yeah, the issue is if you hold back, and let's just think about this practically as a business, okay? Let's take away from the stock price. Let's think about this as a business. Okay, so let's say you're Meta, and you're like, you know what, we're not going to buy any more H100s. We only want the Blackwell chips. Okay. So one, you got to wait. So now there's like this time period in there, right, where you're not going to have extra H100s, which means they can't be working for you. Also, whenever you do start to get some Blackwell chips, it's going to be some Blackwell chips. It's not going to be as many as you need. And we know every single one of these companies needs as many of these chips as possible as soon as possible. They're in a war right now with each other to win these games that are the next 10, 20-year games, right? And so every single one of them, what does Elon Musk say on the latest conference call? Was Elon Musk talking about, oh, no, we're going to wait till a Blackwell chip and hopefully Jensen sends us like 20 of those? And no, he's talking about they got 35,000 H100s. They hope to get to 85,000 H100s by the end of the year. So these people that run these little bearish thought arguments, right? They should think about these things a little bit more through. Sometimes I don't think any of these people have ever actually run a business. If they had run a business, I think they would understand maybe on a little deeper level about the fundamentals of these companies.
Expected to be up 410%. Revenue expected to be up 241%.
What?
At the end of this evening.
Jimmy, earnings year over year expected to be up 410%. Revenue expected to be up 241%.
Cheers.
Just gives you an idea of why the stock is where it is.
It certainly does. I mean, it's pretty incredible. And I think I mentioned this to you yesterday, Scott, but the earnings estimates for this quarter are 230% higher than they were 1 year ago. They're 20% higher than at the beginning of the year. Now, I think they will beat the earnings estimates. I think they will raise guidance. And my comment, rhetorically asked, is, does anyone disagree with that? I mean, in the world, I'm struggling to find a single person who's saying, no, they're going to miss. Joe, I heard your comments wonderfully made about what hedge funds have done and what put sellers have done. And I think, or put buyers rather, I think what they're saying is probably what I'm saying, which is that everybody expects a beat and a raise. I mean, this would have to be one heck of a quarter to beat lofty expectations. And I think there are some people, me included, who are saying it's probably all priced in. Now, I'm a holder of the shares, have about a 2% position. I expect that in the fullness of time through the end of this year, I'll probably double that. But I'm not buying it here today. That's my comment.
All right.
It's interesting because when people say it's already priced in, it's not already priced in.
Okay.
And the overwhelming majority of people, logically, when you look at Nvidia, you say to yourself, yeah, it's priced in already. But I don't know. This company, you cannot bet against it from the perspective of holding a position.
I'm not betting against it. I do hold a position. I hear you. You're absolutely right that has been the history for several quarters.
You think if they,
at some point that won't be the case.
You think if they,
that's fair.
You think if they hit the ball out of the park from a guidance standpoint that it's already priced in?
I don't think that's controversial. Yes, that is what I'm saying. I don't think it's controversial. It might be wrong. I mean, I'm not sitting here saying, by no means am I saying sell the stock, for goodness sakes. No, if it goes down, I'll buy more.
No, I don't understand why you guys keep going with the sell the stock thing. No one's suggesting if they miss, you're going to sell the stock. Right. But that doesn't mean the stock is not going to go down. Why does it have to be like either they beat, oh, you stay in the stock, they miss, you sell the stock? No one's suggesting that.
Okay, no.
Who's thinking about selling?
In all due respect, sir, that's how a stock price goes down. Selling pressure. Too many people selling, not enough buying. In all due respect, sir.
Stock.
I may have been misreading what you were saying, what you were asking, but my point is I'm underweight this stock to where I want to be, to where I think I will be. I'm not buying it right here at $947 a share. That implies that I think I will get a lower price at which to buy it. I'm not talking about selling it. I mean, that's not in the cards. But what I am saying, and again, could very well be wrong, is that the expectations for this stock are incredibly lofty.
Well, which is why we asked Christina Parts.
We're playing a big game of musical chairs in regards to Nvidia. That's a problem with Nvidia. That's a problem with Nvidia because they're going through such an insane demand cycle. Demand just ran you through these revenue numbers and earnings per share numbers and expectations, right? And this is important to understand, not just for Nvidia, but anytime you're in any of these somewhat cyclical type stocks, which Nvidia is somewhat of a cyclical type stock, right? Listen, it's a big game of musical chairs. Everybody's playing here. So everybody's trying to figure out where's the top roughly for revenue for this company. And at that time, they're going to try to jump out of this thing. Now, people have been thinking like, oh, maybe we're around the top, so they jump out, and that's why you see the stock move down 10, 20% quickly. And then they're like, oh, no, it wasn't the top. And so they get back in and the stock rockets higher. So you're going to continue to play this game of musical chairs until Nvidia, it's clear that Nvidia's business model has topped in the short term. Doesn't mean it's top for the next lifetime, the next 10 years, 20 years, just top for the next couple years. And they're not going to really be able to grow revenue more. No one's been able to get to that level yet in regards to Nvidia of like really feeling super confident about the business's top. Once there is, and if that happens in this quarter, people will jump out of this ship like a bunch of rats on a ship that's sinking, okay? That's what will happen. But folks have to be confident when they go to, make that move. Hey, this is it. This is it. Like, the business model is about topping now at this point in time. Maybe they put revenue to 28 billion or something a quarter, and then that's about the top, right? Now, if people get confident about now they're still going to grow to 30, 32, 34 billion, 36 billion, then people are going to continue to pile in this one. It's a game of musical chairs right now.
To come here to Post 9 to tell us if they can live up to the hype. I mean, you know the story. You tell us about it all the time. Expectations keep going higher. CEO's a rock star, right?
Yeah.
Everybody seems to.
Leather, various leather
everybody
seems
to think, right? It's like that commercial, like, you're not a rock star. This guy's a rock star, right? Don't act like a rock star.
At the GTC event not too long ago, he talked about filling out, entire stadium, and he did. And there were celebrities, a video, Ashton Kutcher walking out, all of these celebs going to see him. But I have points for all of you guys. So, CapEx spend, we care about that as a driver because 50% of data center revenue last quarter came from cloud hyperscalers. So that's what we always mention this number. We didn't talk about it, but Tesla is known to become a bigger customer this past quarter, so that should help drive it. AMD, they released their earnings first. They did raise their AI revenue guidance to $4 billion. So that is a good barometer for NVIDIA, for their strength going into that. And then this one's not mentioned too often, but there's a high correlation between Taiwanese chip exports and NVIDIA sales, right? And so exports, recent report showed really some strong strength. And so that's, another reason to your question, Scott, why we see a driver. Now I want to just highlight some risks because you guys, you talked about demand being priced in. So, and I know you challenged that. I think estimates have come up quite a bit leading into this. Maybe not necessarily your guidance question, but that does mean, and if you're saying it's not priced in, you're not believing the hype about the hype theory, right?
Well, the other times over the last 18 months, if you thought all of this AI good news was priced in, other than a couple periods of pullback, I mean, you've kind of been wrong. Right?
Last summer was a pullback, though. To Jason, you said a blowout quarter, and then there was quite a pullback, and it had an outsized negative effect on the markets in the summer.
Let's go ahead. Let's pull up NVIDIA for the last year and a half to 2 years now at this point in time. Last year and a half specific. And we're going to be able to find, this baby has had quite some interesting pullbacks here. So here's a 1 year, and let's back it up. So obviously it was going through the bull cycle of, so all these stocks kind of bottomed out around October 2022, right? And then they started their moves up, right? And that was just, this was really didn't have too much to do with AI. This was more just the market momentum was pushing everything up. You look at pretty much any tech stock from around October, November 2022 through that next few months, and pretty much they were all up, okay? Where AI started getting really exciting was kind of in the springtime. People started being like, oh, maybe this could actually affect NVIDIA's numbers. People started talking more and more about ChatGPT. Maybe it's going to affect NVIDIA, and boom, and there you started to see an uptick, right? Now you had nice pullbacks here throughout that time, right? NVIDIA reaches right around close to 500, sinks down here to about 412, sinks even lower here shortly after to about 400. So we got a 500 to 400 move right there. And it had these pullbacks, then things really get exciting, and then you get this massive pullback here, which was from, 950 all the way down to about 750, 760 there. And now we've had this next massive upward move here. So you've had several of these moves now at this point in time, and like I said, everybody's just treating this stock like a game of musical chairs. And they're trying to figure out where's the top for the business model in the short term here and all these sorts of things. It's a funny game, but it's a game that's being played right now.
Well, that's why we suggest that it holds so much importance.
That's why it reminds me a lot of Apple back in the day. Apple back in the day, and when I'm talking about back in the day, I'm really talking about 2010, 11, 12, 13, 14. Apple back then was such an exciting growth story, obviously. They had iPad growth, they had iPhone growth, right? Both those were relatively new products. Like iPhone really started to take off around 2009, 2010 in a major way, although the product was actually shown off in 2007. It just took a while to really start ramping up the numbers. iPad, was shown off. That was actually, if I recall, that was the iPad 2, I think, or was it the original iPad was the last device I think Steve Jobs ever showed off. And that really started to ramp up 2011, 2012. And during that period, it's very, very exciting because Apple's numbers were just going straight up, right? Their profitability was exploding, their revenues was exploding, their customer base was exploding. Such an exciting time in Apple stock. Kind of like Nvidia stock right now, right? But the thing was, everybody was like, where's the top? Like, could they really sell more iPhones? Like, oh my gosh, they sold 20 million iPhones this quarter. Can they really sell more iPhones than that? That seems like an insane number. Wow, they sold 3 million iPads. Could they really sell more than 3 million iPads? And so Apple actually, could be volatile. At the end of the day, Apple stock was going up and up and up, but it had some, vicious drawdowns too, because people would all of a sudden start talking about maybe this is a top, maybe they can't sell anymore. Like, can they really? They sold so many. Look at the revenue numbers. Can they really do bigger numbers than this? So it became a little bit of a game of musical chairs, and that's exactly what Nvidia is right now. It's a very exciting growth story but it's a game of musical chairs where everybody's wondering where's the top at.
Oh, yeah. Well, we know that. Just you mentioned all the stats and the impact on the growth rate on the S&P 500, given the market cap and the growth. I think the key thing for NVIDIA and why everyone watching should really care, and not because you necessarily own it or it's in a fund that you have, but because the earnings potential for NVIDIA, it's climbed dramatically compared to other names. And so that weighs a lot when you factor in this company and its impact on markets. But you talked about April. Didn't the Fed comments about the Fed, and you saw tech all across the board, possibly no cuts and that whole debate. And so that played a role in NVIDIA shares as well.
But that's healthy. So you had the 10% positioning correction already, and I think that's a point of emphasis as you look forward, where the positioning is not as speculatively long as we thought. But I guess the question for tonight really comes down to, is the AI trend and the thesis surrounding AI still, levitating, still supported? Because I look at the recovery that we've had in this month, and it's all about corporate earnings, and it's corporate earnings growth from these technology companies. So I guess more than anything else, maybe what NVIDIA does tonight is it just validates what we're witnessing in corporate earnings more than an idiosyncratic story surrounding the stock itself.
So there's a new bear case out there. I heard this from somebody last night, okay? I'm not going to mention who, but somebody's got a new bear case out there. So there's a new thing the bears are going to be talking about in regards to NVIDIA. If NVIDIA's making too much money, then the other big tech companies are going to hire away all NVIDIA's best employees, and then they're just going to be able to make all the chips that NVIDIA has and that they're going to have in the future. That's the new bear case. Once again, I think that's a fundamental misunderstanding of how business works. And I wish that were true, because my biggest investment in the public account is what? Meta. I wish it was so simple that Meta could just hire away NVIDIA's workers and just, wow, they create these chips that are just as good as NVIDIA. I wish that were the case. And my second biggest investment in the public account is Tesla. I wish Tesla could just hire away NVIDIA's workers and create a chip just as good as NVIDIA has, if not better. And the same thing for Amazon. Amazon's one of my biggest investments. The reality is, that's not how this works. It's no different than saying, NVIDIA could just hire away some of Meta's best workers and they could create the next Instagram, the next Facebook, the next WhatsApp. And it's not the way this works. I wish it was. I really do. Oh, man, I really do. But it's not the way this game works, okay? So, you got to get realistic about these things. But these bears, they're desperate. They've been trying to bet against NVIDIA for a year and a half. They're so desperate. They're so desperate for this stock to go down. They're so desperate to make up any plausible bear case in their head. And it's just, it's getting more and more ridiculous. I don't know what's going to happen next.
Clearing the 200-day moving average, or the high earlier this month, stocks are likely to continue their rally, and he's been right on a slew of his calls this year, turning bullish on China back in February, the CSI 300 index up nearly 15% since then. He also called for another 20% gain in gold in the beginning of April. It's up 7% since then. Joining us now is Renaissance Macro Research Chairman Jeff DeGraff. So we highlight some of your winning calls. You're still bullish on this market?
Yeah, I think we've entered probably more of a latter stage. I don't think it's ninth inning by any means, but I think when we look at the sentiment, when we look at the momentum peak that Mike just alluded to, which was kind of a rah-rah momentum market, which was really apparent at the end of the first quarter and is now faded. Now you get into kind of the sloppiness where you get the catch-up trade. So I think we're still in decent shape for the summer. The presidential election season tends to actually be pretty supportive through July.
That is true.
So I think we're okay going into that. But, this is not where we were, say, a year ago. This is certainly getting latter in the stage. And the Fed seems to be having very little impact, not only on the real economy, but on markets as well. So we'll see what their course is as we continue.
We were just talking about the Nvidia effect that clearly goes well beyond just the size and the market cap. Where do you see this one going? Because I don't think you've been as enthusiastic about Nvidia, which has not been the right call.
Yeah, well, we backed off Nvidia back in early March, and we just said, look, the expectations are so high here that we expect it to come in and consolidate, and it's basically been doing that since that point in time, albeit at the upper end of the range. We still have this enthusiasm, if you will, with things are priced. The upside is priced more aggressively than the downside in the options market, and that usually gives you an elongated consolidation. So I'm not bearish on Nvidia. I just think it's going to be really, really hard to meet those expectations, and I think you have to ask yourself who the marginal buyer is, no matter almost what they do today. There are a lot of people positioned in Nvidia, and that's going to make it very challenging to bring people in because most of them are already there.
So in all due respect to this gentleman, right, should you value his opinion that much in regards to Nvidia? Well, think about what he's focused on. Macro research. If you're focused on Nvidia and exactly what's going on with Nvidia's company and exactly who their customers are and the nitty-gritty details of what this chip's getting sold for and how many this company needs and whatnot, you're more of a micro research. You're really getting into the nitty gritty of companies. If you're macro, you're more focused on the overall market. So I would put much more weight in his opinion of where the overall market's headed, how he feels about the overall S&P 500 or the economy versus his opinions on an individual stock. He's not going to have the type of time to really dive into individual stocks if you're really just focused on trying to make these overall macro calls in regards to the market.
Jeff, we mentioned, or we teased at least, what some called a fail-safe sign that the trend remains friendly. You want to go into that?
Well, yeah, we always use a 20-day high in an uptrend, right? So you have to define the trend first. But if you make a 20-day high, coming out of an oversold condition, a lot of people start to worry about, are you topping? Are we gonna break down? There has to be some point where you just say, look, uncle, we're gonna make sure that we're on the right side of the trend. We were big fans of the oversold condition that we had back about a month ago now. We didn't have the sentiment that we really like to see, but that doesn't always happen. So we were players on that weakness. And then our whole point was, look, even if you didn't believe our call, getting through the 20-day high, at some point you just have to say, look, there's enough is enough, and I have to make sure that I'm in parallel with this market. And that's one of the things that we use is just understanding where we are in relation to that 20-day high on a trend basis.
So as people look for other potential AI winners, thought this from Steve Eisman, who was on last night on CNBC of The Big Short fame, talking about Apple was interesting. Listen to what he said.
I think Apple's actually the hidden AI play, not exactly today, but will be, because everybody's focused on the chips and everybody's focused on the cloud. But at the end of the day, when there will be apps, and I have no idea when that's going to be, but when there will be apps that the consumer can use, they're going to want to use it on their phone.
Apple's staging a nice comeback here, 8 days in a row. What do you think?
To be fair, that's true. As long as the smartphone is the most relevant device, that is accurate. Whenever the day comes in, a smartphone is not the most relevant device, things change. But for now, yeah, he's 100% accurate.
Undervalued to you? Do you buy that?
Well, we're not big value players, so I don't know anything about the value of Apple, but I can tell you the chart has been in this big consolidation for the last...
Boom. So if he doesn't know anything about the valuation of Apple, you're going to trust his insight and research into Nvidia? No, that doesn't make sense.
Months now. You really need to pop that above 200 to break it out. If you do that, and it's not that far from doing that here, if you do that, that puts about another 50 points onto Apple's in terms of this base formation that supports it. So we'd be more inclined or bullish as we get a breakout and get that confirmation than we would right here. Right now, it's overbought in a resistance zone. So I think that's going to be more challenging. I would not put marginal money at it right here. You give me another 10 or 15 points to the downside and it starts looking more interesting to me.
Hey, finally, Jeff,
is Apple undervalued? So let's answer that question. So in order to understand if Apple's undervalued or not, you really got to compare them versus their peers, right? So I pull up 1000xstocks.com here, and we're going to go ahead and we're going to compare these guys next to each other, right? I want to compare them against their peers. Who are you going to compare Apple to? You're going to compare them to Google. You're going to compare them also to Meta, right? Those are the natural peers you're going to usually compare this company with, right? So let's go ahead and hit compare stocks. Boom. So here we are. Apple trading at a forward P of about 28 versus Google about 24. Meta's about a 23, right? PEG ratio on Meta, obviously significantly lower than Apple and Google, and significantly than Apple, obviously. Much higher gross margins, and that's because obviously Apple sells physical products. It's not just a services business, right? Versus Meta's ads. And then Google's a little bit of a combination of a few different businesses as far as that goes, right? Net margins, Meta's exceeds Apple and Google in terms of net margin. If we go ahead and look at revenue growth expectations for Apple, they're very minuscule, obviously very strong growth for Meta this year and next year expected. So, the bottom line is if you compare them versus like a Meta's a way better buy. Even though Meta stock has done way better than Apple over the last 18 months, it doesn't mean it's not still a better buy. Meta is factually still a much better buy than a stock like Apple now at this point in time, right? By the way, 1000xstocks.com. Go to 1000xstocks.com if you're looking to join the service. We have quite a few members now at this point in time. We're letting in more and more each week. This is the membership card you get sent to your house once you join us in there. Woo, it's beautiful. All right, guys, busy day for me. I better go ahead and hop on Twitch if you want to join me for that. That is going to be the pinned comment down there. Get ready to rock and roll. It's a big day, baby. Much love and have a great day.